So Aisha, I think the best strategy for next couple of days is just lie low.
Yeah, do nothing.
Just lie low.
Yeah.
Rather than preempting what markets would do, I would say let the market prompt you which way it wants to go. And the market will prompt you. I see the following happening. I think in last 3-4 trading sessions, Nifty has been absolutely flat, both in terms of price action, in terms of the absolute change, and also what we've seen in terms of the open interest addition. There are a variety of factors why that is happening, but the bottom line is that the Nifty pretty much is jumping in the same place. So the fact that the Santa rally would have spilled itself from 2023 to 2024, that has not happened. And at least personally at Etina, we were not expecting that to happen. Second, what do you do? I think for anybody to make a case that markets have topped out and we are not going to be in for, we are going to be for some lot of volatility and lot of downside, I think that also is not applicable. I see the following happening, which is that lie low, let the market prompt you what it wants to do. Market may prompt you this week, market may prompt you next week. But when there is a little bit of panic in the market, and you may want to define the word panic based on when a Nifty support is taken out, that's the time you want to really start buying. So if you want to participate, you definitely want to participate at lower level. Let the market prompt you with something, and I think that prompt will come when Nifty starts slipping below the key support level of 21,500, 21,400. That's the time you will actually see a little bit of panic. Everyone who's centered around that as like a line in the sand and it will be holding on. Our technical experts, they will start panicking. And that's the time you actually will start getting some mini bargains in the large cap, in the mid cap. So I'll say it again, don't preempt, let the market prompt.
Yeah, but it is a heavyweight-led sell-off regardless. You know, same pattern as we saw in the last 2 trading days. Yesterday also, HDFC Bank, Reliance, ICICI Bank, they were the ones on the back foot.
And they were supposed to be leading it from the front.
Yeah.
HDFC Bank
was the top call end of last year.
Yeah, I mean, this is the consensus stock, nothing wrong with the numbers, and yet a consensus, yet a big underperformer. So if you have HDFC Bank, Reliance, ICICI Bank and Infosys, if they are not moving in sync with what the market is doing, be rest assured Nifty is not going to do anything. FIs are back, but flows are actually moving differently. So for me, if you frankly ask me that what the realization has been for me, just about everyone is saying, okay, banks are cheap. FIs will come, they will buy banks and they will buy HDFC Bank. FIs are coming, but they are buying different stocks. They are buying an Indian hotel. They are buying autos. They are buying, consumer names. They are buying fintech. So it is not that FIs are not coming back. Block deals are happening. So the quantum will look very strong, but the allocation is not going to what could be called as the traditional names. FI will come, they will buy good old HDFC. If they are not buying HDFC, they'll buy Reliance. If they're not buying that, they'll buy ICICI Bank. There are some who will buy all three, but right now they are buying none. Yeah. So that I think for me is the big thing. And till the time these 4-5 sumo stocks, if I may use the word, between HDFC Bank, Reliance, ICICI Bank, Infosys, you got like what?
Solid weighted, yeah.
Yeah, I mean, HDFC Bank itself is 14, Reliance is 10, that's 25. Add back the other two, it's actually 35 to 40% weightage. 40% weightage is just there.
And they're skipping all of it.
Yeah, I mean, that's what data is indicating, Asha. I mean, just think about it. Even in the October to December, let's actually look at the data. Let's look at the data from October. Let's say from 1st of October, Nifty, Bank Nifty, HDFC Bank, ICICI Bank and Reliance. We'll wait for it to come up. We are only looking at this year. Just a little bit of patience, folks. It'll come up. You'll understand the point I'm trying to make here. Now, that's HDFC Bank for you from, let's say, October. It's giving you 8% return. Reliance has given you 10% return. You've got a return of 2% in ICICI Bank. Thank you. And then let's look at Infosys, 6% return. Superimpose it with Nifty and the Bank Nifty. What do we have? This was like the most precious part of the market. And this was the time when you saw like a breathtaking rally, a rally to remember. Last 3 months, touch wood, 2023 is like a dream come true moment for just about every investor. And in that, what did we get on the Bank Nifty underperformance? Nothing from HDFC Bank, nothing from Reliance. That's the right or the wrong, I don't know, but that's the state of the market.
And to think in the month of December, people were making money on pretty much everything, especially when it came to stocks within the broader universe. Yep, but that is the stark reality when it comes to those heavyweights. Let's just quickly tell you about the global markets as well. You did have a pretty flat close coming in. Nasdaq was a bit of an outlier that managed to echo out again. A lot of those big tech stocks like Nvidia, Amazon, Alphabet, they managed to pop up. But across Asia, it's a little bit mixed. You've got the Japanese stocks though that have extended gains. It's a 33-year high that they saw in the previous session, and that continues to remain in the spotlight when it comes to the overall Asian screen. But back home then, kickstarting the earnings season and just taking a look at the overall expectation, it seems like the revenue is expected to be higher overall. This is sector-wise 5% with a PAT growth of about 12%. And Nikunj, if we were to look at individual sectors, then where is it that we're expecting the maximum growth to come in?
See, let's look at where the expectations are the highest. And expectations are highest in consumer discretionary, which is autos largely, and anything which has got to do with consumer spend, because the inflation and the base effect is kicked in. So everyone in a sense is hoping that you'll actually see a 20% jump in NBFCs, a 10 to 15% jump in banks, and IT is the only sector where sequentially everybody is penciling in no uptick or no decline. Now, if one really looks at what the earnings trajectory has been, that in last 5-6 quarters, every quarter 50% to 60%, on an average 50% plus companies have managed to beat the estimates. So we've had a nice steady earning upgrade cycle for last couple of quarters. The market positioning is such that we need a strong quarter. Companies have to not only meet expectations but beat expectations, and the earnings cycle actually should continue in the right direction. That's where I guess the real strength of the market would be tested. So this time around, it will not be a sector, it will not be a theme. I think it will be individual companies where the earning expectations and the forward commentary really has to be mapped. I would look at this earnings season as a very stock-specific earnings season rather than calling out a sector, because there are so many variations within sectors which actually will be visible in this earnings season that you cannot put your finger and say, okay, IT is good and banks are bad. No, I don't think it is like this. You'll have to really look at individual companies. And in terms of the trajectory, the challenge I think for the market is that everybody is convinced numbers would be strong, earning upgrade cycle would happen. If that does not happen, then we could hit a air pocket.
Yeah. Okay.